Okay, explain the stages used in laundering money, commenting on why water score has been identified as high risk. And in second requirement, it's asking to recommend four elements of an anti-money laundering program which audit firms such as Hunt and Co should have in place. These are the two requirements which we have to deal with, and in this video, I will deal with the number one requirement, that is explain the stages used in laundering money, commenting on why Waters Company has been identified as high risk. Okay, so now let me start going through with the scenario. You are manager in Hunt and Co, a firm which offers a range of services to audit and non-audit client. You have been asked to consider a potential engagement to review and provide a report on the prospective financial information of Waters Company, a company which has been an audit client of Hunt and Co for 6 years. The audit of the financial statements for the year ended 30th April 2014 has just been commenced. Waters Company operates a chains of cinemas across the country. Currently, its cinemas are out of date and use projectors which cannot show films using new technology which are becoming more popular. Management is planning to invest in all of its cinemas in order to attract more customers. The company has sufficient cash of fund half of the necessary capital expenditure but has approached its bank with a loan application of 8 million for the remainder of the funds required. Most of the cash will be used to invest in equipment and fittings such as new projectors and larger screens, enabling new technology films to be shown in all cinemas. The remaining cash will be used for refurbishment of the cinemas. Okay, so the draft forecast statement of profit or loss for the year ending 30th April 2015 and 16 are shown below, along with the key assumptions which have been used in their preparation. The unaudited statement of profit or loss for the year ended 30th April 2014 is also shown below. The forecast had been prepared for use by the bank in making its lending decision and will be accompanied by other prospective financial information, including a forecast statement of cash flows. Year ended 30th April 2014. Unaudited revenue was 35,000. Operating expenses were 28,250. 6750 operating profit. Okay. Finance cost 1700. PBT is 5050. Okay. Operation information note 1 and 2 is not relevant for forecast information. And year ending 2015 forecast for 43,000, 31,500 expenses, and 2016 46,000, 32,100 expenses, 11,500 operating profit and 39,000 operating profit. Finance cost given and PBT given. The forecast increase in revenue is based on uh, following assumptions. All cinemas will be fitted with new projects and projectors and large screens to show new technology film by September 2014. Ticket prices will increase from 7.5 to 10 from 1st September. The operating expenses include mainly staff costs, depreciation of PPE, repairs and maintenance to cinemas. Okay, the audit strategy relevant to audit of Waters client, Waters Co concludes that the company has a relatively high risk associated with money laundering, largely due to the cash-based nature of its activities. The majority of the customers purchase their cinema tickets and refreshment in cash, and the company transfer its cash to overseas banks account on regular basis. Okay, asking again, the requirement is explain the stages used in money laundering money, commenting on the why water company has been identified as high risk. So not so difficult. Let's start with the answer. Okay, and while answering this question, first what I will say, the part one of the two B is there are three stages involved in money laundering. Okay, that is placement. Okay, first of all, it's placement, which is when cash obtained through criminal activity is first placed into the financial system. Business owners who have illegally obtained funds can use a cash intensive, yeah, cash intensive business to mix legitimate cash receipts from business activity with the funds they wish to launder. So far, so good. Then, for Waters Company, the fact that most customers are likely to pay in cash indicates that it would be easy for genuine and illegal cash to be mixed up and banked, thereby placing the illegal cash into financial system. So far, so good. Then I will discuss about the second stage. That is, the second stage is layering. This is when cash is disguised by passing it through complex transactions involving many layers, making the transactions difficult to trace. Okay, this often involves moving the cash internationally, which adds a layer of complexity to the layering process. Water company transfer sums of cash to overseas accounts. Bank accounts indicating that layering may be taking place. Alright, so far so cool. Then we'll discuss about the last stage, the final stages, integration, which is when the illegally gained funds are moved back into the legitimate economy. At this point, funds have become clean, funds have become clean and are invested in property of or financial instruments or otherwise spent. Lastly, for this part, I will further write the Waters Co is planning to invest large sum of cash, $8 million, in its cinema business, or you can say cinema upgrade and refurbishment program, which could be the which could be the integration stage of money laundering. That's it. If we write this much, we can easily score up to 4 to 5 marks in this part of the question out of the 5 marks which were offered by the examiner in this part of the question, right? So hopefully it is helpful, and I will see you in next video with the next part of the question.